folks, I'm going to make a statement that is going to blow your mind, and it's something I never thought I'd be saying this early on, but I have to say it, and that is, tech stocks are undervalued. And oh my God, don't flip out on me just yet, because if you took a look at the markets today, guys, everything is selling off. You can complain it on the elections, you can complain it on the pandemic, heck, you could play that on the recession that we might be heading into. But if there's one thing you can't deny, guys, that was the unbelievably stellar earnings that I don't think anybody was anticipating, and it don't make any sense. And if there is one sign of undervalued companies, it is unbelievable, explosive revenue growth and stock selling off on that news. So we're going to get into all of this. I'm going to break down the most important tech stock earnings and tell you guys which ones are on the best discount if you have ever been interested in getting in now. So in the clarity of my transparency, hit that like button and let's jump right into this. Welcome back, passive income investors alike, to the twilight zone, because that's where I feel I'm living right now, as I gone through this crazy mental shift, as I was one of those people that believed tech stocks were overvalued. But today, I was proven wrong. We can see tech selling off insanely aggressively, with Facebook down 5%, we got Apple down 4.3%, Microsoft down 1%, heck, even Amazon is trading down 3.5%, and I'm saying this is crazy because they just posted the most stellar earnings I have pretty much ever seen. And I'm going to tell you what ones are the best ones if you are looking for more exposure to tech. But we got to talk about Amazon here first, because it has always been considered the most overvalued of the bunch, and nobody could predict that Amazon would continue to grow revenues at the rate they were growing them. And the thing we're going to focus on all of these earnings, guys, is just their net sales, their bottom line revenues, because at the end of the day, sometimes, they have write-offs, we're dealing with a pandemic, they have to have extra expenses on cleaning material, and sometimes it looks like their earnings per share is lower than it should actually be. So the only thing that matters is, are they growing those revenues? Do they have more sales? And we can see Amazon's net sales increased by a whopping 37% to 96.1 billion in the third quarter, compared to 70 billion in the third quarter of 2019. Guys, I don't even know how to explain to you how absolutely absurd that is, but the fact that Amazon is growing at a 30% rate right now should drop your jaw to the floor. Let's talk about Microsoft, which posted earnings a little bit earlier in the month, which weren't nearly as stellar, but the fact of the matter is Microsoft still growing, baby. They managed to increase their revenues by 12% to $37.2 billion. Nothing nearly as crazy as some of the other ones we're going to look at. Definitely not comparable to Amazon, and it is still really overvalued. So I'm not going to be putting this one in the basket of stocks you should be rushing into, but the fact that Microsoft has dropped so aggressively makes me think even buying it around this $200 share price isn't going to do you any wrong here, guys. How about Apple, the golden child of the entire market, still trading close to its $2 trillion market cap, and just taking a look at its total net sales, because everyone wanted to beat up on Apple with the lackluster iPhone 12 sales, which I don't think are going to get fully calculated in until the fourth quarter of this year. But nonetheless, guys, their net sales were still able to grow by roughly $600 million here. Now, we're not talking about absurd growth here, especially next to Amazon, Microsoft. I mean, it definitely lacklustered here, but nonetheless, guys, it is still growing, making it probably the most overvalued of the bunch. So based off the third quarter of all the tech stocks we just looked through, this is going to be the most expensive. But again, even though it's still growing its bottom line revenue, if it keeps selling off, guys, we are still looking at discount territory, because these companies are still trucking along. So what about Google? Google McDougal here, guys. Let's take a look at its current revenues, which its revenues increased by 14%. So we are on track, getting close to Microsoft's revenues here on the increase, going from 2019 when they did 40 billion against this quarter when they did $46 billion here. And even still selling off into the news here, guys. I don't know why it's saying it's trading up 4.8%. It might have been just because of after hour close, the stock had a bit of a pop, but even still selling off on the news today, guys. And this one also going to sit up there with Apple being a little bit over expensive, but nonetheless, let's just take a look at the last few I want to see here. Of course, we got to talk about my Facebook, one of my favorite tech stocks, the one that I think is the most undervalued of the bunch, and they are still proving absolute absurdity here. Next, probably the next best earnings to Amazon when we're talking about these top 10 S&P 500 stocks, with a total revenue in 2020 here, guys, of $21.4 billion against the same quarter last year when they did $17.6 billion, an increase of a whopping 22%, guys. This is still an unbelievable growth stock and is being exacerbated by this pandemic. I don't know why it can't trade at a higher PE, considering right now the PE ratio sits at 32, but next to Apple trading at a PE of 33 and Microsoft trading at a PE of 32. Yet this sucker is growing at an absolutely absurd pace in comparison to them. So I don't know what the deal is. I love my Facebook. I cannot believe it is down 5.5% on a 22% revenue growth earnings. Like, just stupid, staggering. And finally here, guys, I got to talk about Shopify because I don't own Shopify. It is like Zoom. It is one that I pay attention to really heavily because it has been a golden child of this pandemic. And right now, guys, I think everybody's jaws hit the floor when they posted a total third quarter revenue of $767 million, an increase of 96%, comparable to the quarter in 2019. I legit don't even know what to say about this company, but the fact is they post earnings before Facebook does, and I kind of use this as a catalyst to understand where Facebook is going. And the reason I use this as a catalyst is when people start Shopify stores, they need places to advertise their products, and the first place they always go is to social media, which 9 times out of 10 is Facebook and Instagram. So as soon as I see this thing post stellar earnings, I know that, Facebook is just going to crush it. The fact that Snapchat posted earnings a little earlier on and they also crushed it to an absurd degree. We are winning on so many fronts here, and this is why I am not a day trader in the markets here, folks. I'd rather just buy these tech stocks that are growing at an absolutely absurd rate, guys, and just know that their bottom line fundamentals will catch up with the stock price here at some point. They continue to justify their absurd valuations, and with the stock selling off into this news, this is going to be your opportunity to pick them up on discounts. And while I sit here, my accounts are down $10,000, and I can't keep spouting to you about undervalued stocks because of recessions, elections, and pandemics, guys. There is some real fear coming up in the future that these things are considered monopolies, and the government may very well separate them up. And this is what CNBC has been saying about this morning.
You betting, by the way, on the big tech companies, and this goes to the issue of whether we'll be talking about them 10 years ago as the biggest companies in the world, that they are going to ultimately get broken up. I mean, we've been talking obviously about Google, which was in the news with their earnings, blowout, by the way, on YouTube. But a lot of people have suggested, for example, that YouTube will get spun off as part, either because the government will force it or because people will think it's a business imperative.
I think there is going to be more regulation of these companies. You can't have this concentration of power without leading to that. And I think the point I've made before on this is it's going to take a long time to figure out. It's incredibly complicated. The companies make the argument that is a good argument in a lot of cases, that what they are doing is improving the consumer experience and making it better and better. And is it better for the consumer if YouTube and their search engine, Google, are spun apart? I don't know why it would be necessarily. It's certainly better for competition, I suppose. But I think the key point is that if any of these companies are ever broken up, investors in the companies are going to own both. And the companies will then continue to go do well. Right. YouTube is not just doing well because it's a part of Google. It is doing well because it's an absolute juggernaut unto itself. And it will continue to do well, even if the two companies are separated. So I think in general, the regulatory fears are overblown in terms of it being an existential crisis. But I do think it will create uncertainty, and it is going to take a long time for each one of them to work through how you regulate them.
And in light of all of this, these are conversations we are going to continue having this evening over at our live stream channel, The Passive Income Educator, where I joined Matt Money, the six-figure mind that bought Amazon today, right after the earnings report and the stock tanked. And we're going to chat about all of this. So if you want to join us over there, we go live at 10 p.m. every single Friday. But I hope you guys enjoyed today's video. If you did, let me know what you think yourself in the comment section below. But stay cool, stay awesome, and I look forward to chatting to you guys tomorrow.